We want to get your sense of where we are on this recession possibility, because until now people have said, well, it's not going to tip into recession. I'll put up a chart here which basically gives us the warning signs, the risk, and this is a New York Fed probability of recession. And what it basically shows off to the right is it's the highest it's been actually since 2008, 2009, since the great financial crisis. Are we overreacting?
Well, I think what this shows is a wider range of outcomes as the trade dispute between the U.S. and China has increased. We see a 50% chance in our base case that the tariffs, the 10% tariff goes on, and we think the market is kind of pricing that in now. In that scenario, that's not enough to tip, say, the U.S. economy into recession. So in that scenario, we would put maybe a 25% chance on recession showing up. But of course, if the tariffs increase, then the risk of recession goes up as well.
Well, as you talk about your base case, Mark, part of what Goldman incorporated in what they were saying is they do not think there will be anything close to a settlement of the dispute before the 2020 November election. Is that what you're anticipating as well? What do you project in terms of some sort of resolution of some sort?
Well, I think that it's certainly true that both sides still feel like the other side has more to lose, and that the chance of a real settlement occurring grows lower by the day. But that's different from what we see as something of a step function towards a higher chance of recession, which is the 25% tariffs on all Chinese goods being applied, and the president hasn't gone that far yet. And I think what makes this such an interesting period is that we do have some of these decisions, really sit with the president of the United States, for now anyway. And secondly, we have seen that the central banks around the world, but particularly the Fed, are willing to take policy action that should reduce the chance of there being a recession. And so markets are trying to wade through those data points after last week.
Mark, great to speak to you. Will the Fed be able to protect against any more downside in equities, as you say that at the moment markets are priced for the implementation of that 10% in tariffs, but not necessarily for the 25%?
Yeah, so we think that if it's just an extension to the 10%, then the Fed action can certainly ameliorate the high probability that we have a recession. But, if to the extent that the policies out of the White House ratchet up in lockstep with what the Fed intends to do, that would make it much harder.
Does a strong dollar make it harder for the Fed's easing cycle, if we get one, Mark, to actually protect global growth as well as U.S. growth?
Well, the dollar's been strong for a while. I think that there are risks both for the United States and for the globe if the dollar continues to strengthen, as it puts some questions on what's going on in emerging markets and where they are, particularly with their debts. But, I think that to the extent that this is a problem that has been raised on all sides, and to the extent that the Fed is willing to cut rates here, it could take some real aggressive easing, say, on the part of the ECB before you really see the dollar take another leg higher.
Mark, where do you see the dollar going right now? As you said, it has been in a strong position. I'll put up a chart here basically that shows that people are building short positions in the dollar, and some would say that makes it harder for the dollar actually to sell off because people have to cover their shorts.
Well, positioning is certainly a short-term phenomenon. I think we see that as well, that the dollar is probably overvalued on a purchasing power parity basis against many currencies. And so ultimately, we think that it's much more difficult for the dollar to strengthen meaningfully from here. But you're right, on a shorter-term basis, based on positioning, we're certainly in for a volatile period. And of course, the dollar is the one currency where the more that the U.S. government does to create uncertainty, it's the one currency that actually benefits because it is such a safe haven.